Hello traders and welcome to another video review. Today is Wednesday, February 16th, 2022. Let's start with the Forex calendar. CPI data from the China together with the PPI data were released overnight and both of them missed the expectations. CPI 0.9% versus 1% expected and 1.5 previous reading. PPI 9.1% versus a forecast of 9.5% and 10.3% last reading. So this is not quite good set of data from the China. So there's no inflationary pressure in China, which means it's highly unlikely for the Bank of China to increase the interest rates. Next data from the United Kingdom. Consumer price index increased a little bit to minus 0.1%. The core consumer price index increased to 4.4%. The same situation was with the retail price index, increased to 0% versus minus 0.4%. Forecast, and the PPI input and output has a mixed bag of data, a little bit with the under the expectations 0.9% versus 1%, and the output beats the expectations 1.2% versus 0.6%. We are still waiting today for the industrial production data from Eurozone, house price index data from the United Kingdom, and that's everything for the London session. The New York session is filled with the two important sets of data scheduled for release at 2:30. From Canada, consumer price index, which is supposed to increase from minus 0.1% to 0.6%. The same situation is with the core consumer price index. We got all of this sub indices of the CPI. It's very handy to have them, and it's really the key situation here to keep an eye on this sub indices. And retail sales from the US, it's supposed to increase from minus 1.9% to 2.1%. Industrial production data are scheduled for release 3:15 together with the capacity utilization and manufacturing production. At the end of the day, we got crude oil inventories from the US, and then we got some speech from Bank of Canada 7:30, and the last event of the day, FOMC meeting minutes scheduled for release at 8 p.m. So plenty of data today from various markets. I think we should take a look definitely on British pound, on gold as well because of the CPI data, and then we will take a look at the Canadian dollar, and of course we will take a look at the crude oil US dollar index. We will take a look at the US dollar index. What are we going to start with? I guess the British pound will be perfect example. The British pound versus the American dollar daily time frame chart is showing us the consolidation just above the technical support at 1.3515. This level has been pierced many times, but never any kind of a candle close occurred at this level. We can rise our technical support towards the 1.3488. That's the local technical support. This is our main technical support, and of course that levels here 1.3557, 1.3605 are the old technical resistances. Right now we are increasing our range towards the level of 1.3644, and we will increase this one towards 1.3628. So that's the range here. This is currently the trading range. We are waiting for a breakout. As we can see, the data from the UK, the consumer price index data, despite the fact that they were kind of better than the last time, didn't actually mean too much for the market participants, and the British pound is still inside of the trading range. We are waiting for a breakout to the upside. Why? Because the momentum is still positive. It's not that strong, but it's still positive. So we are waiting for a breakout above 1.5644 towards, of course, the key technical resistance 1.57 and 50. So that's the British pound to US dollar. Let's take a look at US dollar to the Canadian dollar. As you can see here, not much is going on in this pair. We don't have even any levels. Okay, because that's not this chart. Let me just take a look. US dollar to the Canadian dollar. And this is what I wanted. There you go. That's my chart. So we are now testing and getting rejected from the 61% of the Fibonacci retracement. This is very hard level to break for the bulls. First attempt, second attempt, third attempt, fourth attempt to break above 1.2768. This is the key level for now, and that's obvious for everyone. So if 4 times the market tried to break and they didn't make it, we should expect the market to drop like a stone below 1.2570 and then below 1.2570 towards the lows at 1.2450. So this is what we are waiting for right now on the US dollar to the Canadian dollar, as long as 61% is not getting broken. So gold is the next market we would like to take a look on because of the CPI data from China. What do we have here? Bearish engulfing pattern on spot gold market into the extremely overbought market conditions. However, we are still trading above this short-term trend line, the black one, of course. So that's good. On the other hand, we are not able to break above this high from the 16th of the November 2021, located at $1,876. So bearish engulfing pattern, the rally towards the key supply zone here, the pink rectangle, had been rejected, but we still above the local trend line support. So now 1833 is technical support, 1855 is technical support, and because the momentum is still first strong, second positive, we should expect the gold to rally above 1877 towards 1900 zone here, towards the supply zone. So that's the outlook for gold for the nearest sessions. And last but not least, I think we should take a look at there was Canadian dollar and US dollar index. Of course, US dollar index. What is going on here? We are right now getting pushed lower from this 96.61 technical resistance, but as well from the middle line of the channel. So right now that the market is not going anywhere, it's not trading anywhere in particular, and as you can see, we got only this narrow zone here, 95.12, 95.22. This is the narrow zone for the support, and I'm trying to adjust my levels for the newest data. This is another zone here, 94.47, 94.60. It's the zone for the market to consider as the supply zone. Then of course there is nothing until 93.42. So we got another local technical resistance. We will put it on the chart. This technical resistance should be placed at 96.41. This is the next technical resistance. Market is hovering around the level of 50, which is the neutral level. So please consider the fact that we might see some sort of the down move towards this support or the lower support 95.22, 94.47 before another leg to the upside will be made. If the US dollar index is going occasionally down, it doesn't mean the uptrend is right now terminated. As you can see, since the end of the May 2021, we are making higher highs, higher lows, and this is a definition of the uptrend inside of this channel. We got this broader look for that channel. Of course, we can put one more line here if someone wants to be particularly sophisticated with the technical analysis. We got this line here, as you can see, but it has not been that much respected by the market participants as it should be, and this is not the low, not the swing low of this up move. So yeah, you can have it on this chart, but I'm not quite sure if this is really necessary. Let's have it on the screen. Anyway, let's see if the market will react on this line. If it does, then we will keep it. If it doesn't, then of course we will remove it from the chart. That's just supporting line for the analysis. Of course, we are still waiting for the 97.70 level to be hit as the extension of this local waves. Let me just take a look. Have I placed it correctly? No. Now this is the level of interest. 61% was 96.90, and if we measure this swing here, A, B, and the C, so that's not apparently a valid target for the for the market. So I think this is no longer applicable, and we should right now just use the technical resistance and support levels for the US dollar index to keep our analysis straight and very simple. So that's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.